The market is closed for the weekend. Scholar Rock Holding Corp, trading under the ticker SRRK on NASDAQ, closed on Friday, November 14, 2025 at $30.84 per share. That price reflects a relatively flat movement of plus 0.16% for the day, which on the surface might seem unexciting. However, the flat close masks an immense, nearly 15% pre-market surge and significant volatility throughout Friday, all driven by the release of their third quarter 2025 financial results. The raw numbers, an EPS miss at minus $0.90 versus an expected minus $0.84, would normally crush a clinical stage biotech stock, yet SRRK soared pre-market. This tells you that the market's expectation versus the reality delivered by the company's communication is where the true analysis lies, and the reality that blew past the expected earnings disappointment was a subtle but critical update on the regulatory timeline for their lead drug, Apitegromab. While a missed EPS is the expected reality for a pre-revenue company, the unforeseen positive reality was management's confident clarity on a 2026 resubmission and potential U.S. launch, coupled with a major de-risking move, securing a second commercially approved U.S.-based fill-finish facility for Apitegromab. That second facility accelerates their timeline and significantly mitigates the risk associated with the FDA's Complete Response Letter, CRL, regarding the original Catalent manufacturing facility. It's this pivot, this immediate and decisive action on a key bottleneck that sent the stock flying, proving that for a clinical biotech, the pipeline's progress and the surrounding de-risking events matter far more than an interim negative earnings number. The common belief about SRRK has been one of a high-potential but high-risk biotech, defined almost entirely by the success of Apitegromab for spinal muscular atrophy, SMA. The stock has ridden a classic biotech wave, huge gains on positive Phase 3 trial data, then a significant pullback from its 52-week high of $46.98 after the FDA's CRL in September 2025. That CRL, which was solely related to manufacturing observations at the contract manufacturer's facility and not the clinical data itself, created a palpable tension between the drug's undeniable clinical efficacy and the uncertainty of its commercial timeline. The market priced in a long, drawn-out fix. The deeper take, however, revealed in the Q3 report and subsequent conference call, is that Scholar Rock has already executed a plan to navigate this manufacturing hurdle faster than anticipated. They confirmed a constructive Type A meeting with the FDA and critically detailed the accelerated timeline with a new commercially approved fill-finish partner with tech transfer underway and commercial capacity reserved starting in the first quarter of 2026. This isn't just management spin. This is concrete execution that brings the 2026 resubmission and potential approval timeline into sharper focus, validating the analyst consensus that the SRRK stock's value is not impaired by the clinical data, but temporarily held hostage by a supply chain issue that is now being aggressively resolved. Looking at the recent trading activity, the stock's volume on Friday, which was nearly 1 million shares, demonstrates the institutional and retail reaction to this news, albeit in a market-closed sessions context, which often exaggerates volatility, but the buying pressure was already apparent pre-market. The stock's immediate jump from its previous close of $30.07 suggests that the news was viewed as a massive de-risking event. SMA is a serious, debilitating neuromuscular disease, and Apitegromab is the first and only muscle-targeted therapeutic candidate that demonstrated statistically significant and clinically meaningful benefit in the pivotal Phase 3 SAPPHIRE trial in patients already on an SMN-targeted treatment. This is the core intellectual property that the market values. When the manufacturing risk is lowered, that core value reasserts itself. We have seen this pattern play out in other biotechs. The market penalizes uncertainty severely and rewards clarity and decisive action equally, if not more so. This kind of event can often serve as a strong short-term catalyst, a spike that forces shorts to cover and initiates a new, more confident accumulation phase by institutions who are waiting for this specific ambiguity to be resolved. It makes sense why an online investment platform like Fidelity or a self-investing option like Schwab Intelligent Portfolios might see renewed interest in this stock, as the primary source of regulatory risk has been addressed head-on. Scholar Rock's fundamental business centers on their proprietary platform, which focuses on modulating protein growth factor pathways to treat serious diseases. The core idea is highly selective targeting of the latent forms of growth factors, which is intended to maximize therapeutic benefit while minimizing side effects. Apitegromab selectively targets latent myostatin, a protein that inhibits muscle growth. By blocking this brake on muscle development, especially in SMA patients whose motor neurons are already being preserved by existing therapies like Spinraza or Risdiplam, Scholar Rock is aiming for a combination therapy that addresses the muscle weakness component of the disease, which current standard of care therapies do not fully resolve. The potential market for Apitegromab in SMA is considered substantial, estimated at approximately $5 billion annually for SMN-targeted therapies alone. Apitegromab is positioned as an add-on therapy, which gives it a specific niche and a clearer path to market penetration. The Q3 report confirmed the company's strong balance sheet, with $369.6 million in cash, cash equivalents, and marketable securities as of September 30, 2025. This cash runway is expected to fund operations into 2027, an essential metric for a clinical stage biotech, providing a significant buffer against further developmental delays and covering the costs of the planned commercial launch build-out. Their increase in general and administrative expense, which was primarily driven by investments in infrastructure and headcount to support launch readiness, is a necessary cost of scaling from a clinical stage to a commercial stage company, a positive signal for their conviction in the drug's eventual approval. The stock has also benefited from a very strong institutional base. While the latest 13F filings are dated to the end of Q3, the level of institutional ownership, which is over 100% of the float in some reports, meaning institutions own more than the public float due to short interest, indicates high conviction among major players like FMR LLC, Siren LLC, and Vanguard Group Inc. The recent capital-raising activities, including a $91.7 million net proceeds from an at-the-market share sale and a $50 million drawdown from a debt facility, were strategic moves to bolster this cash position precisely to manage the complexities of the regulatory process and commercial buildup. For an individual brokerage account holder using a platform like Robinhood or a more sophisticated trading tool from Interactive Brokers, this institutional interest and financial planning is a signal of management's preparedness for the high-cost transition to commercialization. This is the stage where a lack of capital can doom a promising therapy, but Scholar Rock appears well-funded. Beyond Apitegromab, the full analysis requires a look at the rest of their pipeline, as this is the long-term value creator. They have SRK-439, a myostatin inhibitor with potential applications in other neuromuscular disorders and notably in cardiometabolic disorders and obesity. The FDA cleared the investigational drug application for SRK-439, and dosing in healthy volunteers is set to commence in the fourth quarter of 2025. Furthermore, the company expects to initiate clinical development activities in a second neuromuscular disorder by the end of 2025. These developments broaden the investment thesis beyond the single product dependency of Apitegromab, adding future catalysts that could drive the stock price years down the line. The market may be focusing on the near-term SMA approval, but the sustained long-term value will come from the platform's ability to produce a second and third clinical asset. This is a common pattern for successful biotechs. The first approved drug provides the capital and credibility to accelerate the rest of the pipeline. The future outlook for SRRK is now one of high conviction